We're sort of both shooting in the dark, are we not? Because, I mean, a lot depends on what happens post-January 20th and the inauguration. Who knows, he may start talking about the level of tariffs and how aggressive he wants to get on China, as well as the rest of the world, even before that.
Well, that's true. And with the threat of tariffs coming into play once President-elect Trump has been inaugurated, I think that's also causing suppliers overseas to accelerate or pull forward their orders in order to avoid any kind of a tariff that might be put into place. So possibly we end up seeing stronger than anticipated imports to the U.S., exports, et cetera, stronger activity in December and thus far in November, which could end up showing a bit of a slowdown as we move into the beginning of 2025. So higher activity might give the Fed reason to pause or at least slow their rate cuts.
So, Sam, talking about tariffs, I know you are in the school and, a fair number of people are with you that, look, this is just Trump on the stump, talking about 60% or higher tariffs on China and up to 20% on the rest of the world. That camp is thinking that, look, this is just a bargaining chip to, in the end, get what he wants. I mean, a lot of people hope you're right. Why are you thinking that, though?
Well, I think because the President-elect Trump does listen to the financial media. He does listen to his economic advisors, et cetera. And in a sense, he wants to look good in the investors' eyes because a lot of the donations come from Wall Street. So I don't think he's really going to do something that's going to upend the apple cart, so to speak, because these tariffs, if they were to be enacted, would actually bring down GDP growth. Instead of a 2% growth, let's say, we would end up with 1.7. So my feeling is that it would end up reducing GDP growth. It would end up reducing earnings expectations. We all know that valuations are a bit stretched at this point, and we need earnings to be improving, not being reduced.
Sam, just back to the Fed quickly. Characteristically, Chair Powell does want to preserve optionality, doesn't he? And he said that rates are not on a preset course. That seems to be a nod to all the uncertainty surrounding taxation policy, surrounding tariff policy. If the Fed does pause in December, how will the markets take that?
Well, Sri, I think the market would be negatively surprised if the Fed did pause in December. I think that the Fed Chair Powell constantly is reminding us that the Fed is data dependent. So they're not going to make any forecasts based on what the president might or might not do, what might or might not happen to employment trends, et cetera. We will respond to the data when it comes. And you're absolutely right. It's like aiming at a target that's on the other side of the horizon. You can't make an exact hit, so you just have to be careful with the kind of movements you make. You don't want to be too quick and reignite inflation, but you don't want to be too slow and introduce a recession.